I honestly think that Bitcoin has never looked as good as it looked right now. And it's 50% or 40% off from what it was like 6, 7 months ago. And I'm like, okay, like if you want to buy like the best toaster oven ever, and you just saw the toaster oven got like reduced by 50% and it got a new upgrade and like got a new feature, like why wouldn't you buy it? Like it's such a weird thing to love Bitcoin when it's going up and hate Bitcoin when it's going down.
Even stranger than that is you have every other asset or every other investable asset out there is at all-time highs or close to all-time highs, except maybe property. And you look at that and you think, well, everything just got dearer by 40% and Bitcoin's at a 40% discount. And it's by far the best investment out there. I look at that and think there's a serious knowledge gap out there between broader retail or the broader market and Bitcoiners. But the beautiful thing about that is that information asymmetry is where we get to get outsized returns over the next 10 years.
Is that kind of also the perfect time to kind of, what should I say, like reposition yourself? If you have stocks, if you have real estate, if you have other assets as well, it's kind of the perfect time to reposition or reallocate towards Bitcoin.
I think it's really important. There are very few people I see who have the proper allocation to Bitcoin, and what we're seeing from around the globe is capital restrictions starting to take place now. And in that light, just running around the globe pretty quickly, South Africa has classified Bitcoin as property now, which means you can't leave South Africa with Bitcoin. They classify it as property, so they'll tax you on the way out. Australia has effectively a tax on the way out if you want to leave. You have capital controls coming into France and probably broader Europe. The UK is trying to cramp down on it. And this is the only asset that gives you protection from an overbearing government. And I look at that and think it's 40% off all-time highs from only 6 months ago. And this asset's on sale right now and you can buy it cheap.
100%, yeah. One thing that has, I think, actually changed in since we last spoke. Not sure if it was already there when we last spoke, but I don't think so. Was Stretch, the new preferred of Strategy, and I don't know how closely you follow Strategy and all the things that they are doing, but it's such an interesting topic, and so many people are really loving to talk about that currently. How do you look at strategy change that sounds so weird, strategies change strategy around like preferred stocks and the huge volume that you have seen with Stretch coming in like the last couple of months?
I think Michael Saylor is very clever. I think there is some criticism leveled at him that he's not a Bitcoiner, and despite that, the only thing I tell him or I see him tell people to buy is Bitcoin. His stocks, on the other hand, represent a financial investment, which he can't tell anyone to do. But I think the advent of those preferred stocks with STRC is a genuine game changer. I think it's a tipping point. This is the fulcrum that basically leverages Bitcoin into the stratosphere, because we now have a permanent bidder for this. And what's really interesting is, and credit Croesus on this for putting this information out, that what he's doing is he's harnessing a $300 trillion asset class in the bond market and providing them a better product in many, many ways. A product that is over-collateralized, not under-collateralized, a product that has got less risk, product that's got greater return, lower tax consequences, and in my book is far more secure and stable than any other credit product out there, that gives a much higher return on a tax-adjusted basis. Now, what Saylor's doing, which I think is brilliant, is he's tapping the biggest market on earth, which is the bond market, and trying to filter that into a vehicle that allows him to buy Bitcoin with it. And for the strategy shareholders, what I think is ingenious about this is this allows Saylor over time to increase the Bitcoin per share without any dilution. So that to me is an absolute critical component of it, because the only way to increase Bitcoin per share previously that Saylor had was to issue stock at a higher MNAV over 1. So that was when the stock itself was trading at a higher market cap than the actual underlying Bitcoin that they've got. Now with the STRC product, he can have Bitcoin accretion per share without any of the overheads or the equity dilution associated with issuing stock at a MNAV 1 or less than 1.
It's really interesting to see that. Do you actually expect something? I mean, I know your outlooks on Bitcoin is already extremely bullish, but has the constant bid that Stretch now allows from a whole new market segment, like a lot of TradFi people will probably come around that. People that search for income, the income investor crowd will come in there. Has that kind of even changed your outlook on Bitcoin, because there's now like a real structural product that brings a constant bid on Bitcoin, which makes a bear market to occur way harder because there's such a big buyer always in the market?
I didn't think we'd see a corporate with a perpetual bid on Bitcoin. That's what I didn't see. I thought it would be by now. I thought we'd be having, a government race to that. And if all things go according to plan, for a prediction I had a conversation with earlier in the year, maybe even late last year, there's an expectation that the US will create a strategic Bitcoin reserve on the 4th of July. Ironically, it's Independence Day. And what better way to usher in Independence Day in the US than to have a strategic Bitcoin reserve issued that gives them sovereignty from a monetary sense. So I think that's on the cards. If that does happen, then that global reserve currency, which is the US, will lead to, I think, a nation state bidding war for Bitcoin within the next 5 years. So all of this is on the table, and that's in addition to having a perpetual bid, of a $300 trillion market that Michael Saylor is just plumbing straight into Bitcoin purchases.
This is crazy because, like, when you think about that, you have an asset that is at a very low valuation and like a 1.5 trillion, like under $2 trillion market cap currently, and has the potential to be 100 trillion, 200 trillion, 400 trillion dollars market cap. And you see that all the demand for it just got started. Like, we have a few hundred companies, maybe like 100, 150, 200 companies that are in that. We have now constant bids, like with strategy. Then we have a potential raise from governments to buy that shit. That is, if you look at all of that, it's kind of hard to not be excited. And then we have like this super low sentiment, and people are like, oh, why? Like it's going down, like why would you buy Bitcoin? And this like extremely negative thinking. It's just like people need to zoom out a little bit.
I think that's just the exquisite nature of being human. There'll be a rush for the door when it's an all-time high, and when it's off 40%, no one wants to buy it. It's just, this is market behavior. This is human psychology. Sadly, we are fickle little beasts, with simple brains. We're not, we haven't really evolved much past that reptilian brain that drives greed and fear. And the funny thing is that greed and fear that drives us, that avoids the pain of buying when it's 40% off, ironically doesn't serve us as investors. And this is where over the next, say, 3 to 5 years, my expectation is that Bitcoin could easily go up 10 times in that 5-year period. So before, call it around 2030, we could see $1 million Bitcoin, which represents a 12 to 15x from where we are today.
Let's say, just for the fun of it, that the 4th of July actually happens. So the US is announcing some kind of Bitcoin strategic reserve. Strategies keep on buying. They probably go through the million Bitcoin, most likely this year, that they accumulate. What will happen to Bitcoin when all those things kind of come into place? Because I think a lot of people still, to this day, expect Bitcoin to have a bear market year. What do you kind of expect from Bitcoin in 2026?
Oh, it's a very big question. And this is where I think having a very wide aperture of what to expect is really important as a Bitcoin investor. I think there's no doubt we could see a drop down to Bitcoin in the 50s or possibly high 40s. Do I think that's going to happen? No. But there's a chance that it could happen. And then the flip side of that is, if we get nation state adoption, if we get sovereign wealth funds buying Bitcoin, if we get that plumbing dialed in, or Saylor gets the plumbing dialed in on the stretch product, we could see a bid of, tens of billions of dollars a week or per day for Bitcoin. And then that changes the outcome of this very, very quickly. Very quickly we would rocket to $1 million. And the ironic thing is, when it hits, if it were to move that quickly over a, say, 6 or 12 month period where we get a 10x return, a lot of investors would look at this and think, this is outrageous, this is a bubble, we can't invest in it. And ironically, this is the start of it, because once we hit that scale, that size in market cap, that really announces to the world that this is a legitimate asset. This is an asset that can be used as collateral. And I've talked a lot about Bitcoin as pristine collateral and the best form of collateral that we've got. But if you look at the broader economics around this, and just to divert this conversation for a very brief moment, everyone talks about there being a debt problem in the world, but no one talks about the fact that we've got a collateral crisis. And this is where the fractional reserve banking is literally at a breaking point. And what we need to do is recapitalize this financial system. And unfortunately, you can't recapitalize it with property, because we're all propertied out. We're up to our eyeballs in debt to service what we've got in that capacity. You can't do that with stocks, because again, we're trading at somewhere between 30 to 50 times PE ratios for the stock market, or the top 7 anyway. So we're kind of full up in that capacity. We can't issue bonds to solve this problem, because you can't solve a debt problem by issuing more debt. So the only way to create more collateral or more capital in the system is really to inflate an asset. And the only other asset remaining class outside of Bitcoin is the commodities. And you can't do that, because that will increase the inflation for everything. So we'll have a rising cost of housing, rising cost of living, and that's something that we can't have. And the only way to solve that problem is really to recapitalize the financial system with Bitcoin, because it's got the lowest socioeconomic impact to day-to-day living.
That's an interesting aspect. I'm also wondering, of course, Bitcoin is still a young asset. It's has volatility a lot more than, let's say, a house has or real estate property has. So it can look scary for TradFi, especially if you don't believe in the asset long term. But I'm wondering, what does it hold back as a perfect collateral? Obviously it is, but the TradFi community clearly doesn't see it as perfect collateral. I mean, many banks don't see it as anything at all. The ones that do see it give you interest rates that are way too high, in my opinion. If you buy a real estate property, you can get interest rates 2, 3, 4, 5%. With Bitcoin, you get 9, 10, 11, 12, 13. And I'm real estate properties are a lot harder to sell, a lot harder to liquidate, a lot harder to confiscate. I mean, Bitcoin, you can hold either directly yourself, as a lot of the platforms do, or in a multi-sig situation. You can liquidate within minutes. You can probably have it completely liquidated in 10, 20 minutes, and you have it. So what are you fearing if you have a loan to value of 25% or so? You're there must be a 75% crash in 1 hour for you to that. I don't understand why the rates for Bitcoin as a collateral are so high at the moment still.
Well, I think not a lot of people have your level of understanding of the risks associated with it, all the systems and processes around protecting yourself. But there are a number of lenders in the Bitcoin space who have a perfect record when it comes to zero defaults, no losses on their loan book when it comes to Bitcoin. And this is something that the major banks around the world aren't cognizant of just yet. They are working very hard to understand that. They're working really hard to put the systems in place so that they can take advantage of that. The important thing is that all of this is changing, and probably the most important thing that's happened over the last 2 years, despite all that we've seen, to me, one of, if not the most important thing that we've seen, is the repeal of SAB 121 in the US, which was a regulation that required banks, if they were going to custody Bitcoin, they were required to hold the equivalent in cash on their balance sheet as a reserve to cover the Bitcoin if they lost it. Now, that makes custodying Bitcoin for the banks completely uneconomical. It is by default prohibitive for them to even look at custodying Bitcoin. And with the repeal of that, that sets up the opportunity for the banks in the US to now custody Bitcoin without it being penal or uneconomical for them. And it also, that is the linchpin, or sort of, tipping that boulder over the hill to get momentum, whereby once the custody sorted out, then the loan products, then the saving products can be developed around that. But without custody and the banks custodying that, we won't have any of those loans and savings products. So, and this is strange coming from a self-custody guy, and that's what I specialize in. But it's really important that those banks start offering those products, because as those products start getting filtered through the banks and more widely adopted, a number of things happen. Firstly, all of the banking customers end up being clients where they purchase Bitcoin. That gives them an opportunity to hold Bitcoin, whether it's on the bank account or alternatively into self-custody. And then that lets them start getting familiar with Bitcoin and all of the benefits to it. So I look at this as really top of funnel. And we're at the very early stages that all of these things that come into Bitcoin. And this is just, a multitude of reasons why the price of Bitcoin is going to go up dramatically over the next, say, 10 years.
This actually brings me, because you mentioned self-custody, and we now talk so much about strategy and stretch and like the collateral and all of those things. I personally, and I'm curious if you have a framework or like a thinking around that. I personally always have 70 to 80% of my net worth, my liquid net worth, in Bitcoin self-custody. That's kind of my golden rule. I want to have the majority always in Bitcoin self-custody, and with the remaining 20 to 30%, I play with strategy and cash. And I'm thinking a little bit about stretch. I'm not sure yet, because I like the upside more than like the cash, because like I have enough monthly cash coming in. But it is an interesting way of parking cash for like the next 6 months or next 12 months, because as we discussed before, we don't really have a clue if Bitcoin will end up at 50K end of the year or 250K end of the year. Like both things are very much possible. But I know stretch will probably not be dunking too much, and probably gives me a nice dividend up until then, which gives me more powder to buy Bitcoin, definitely more powder than I just keep in fiat cash. How do you look at like Bitcoin and the ecosystem around Bitcoin changing personal finance? I mean, there was a 60-40 portfolio that was previously there with like equity and bonds. I think that's just like completely out of the window now. But like, how do you look for like as Bitcoiner for like what we should do with personal finance?
I think on a personal note, you want to hold as much Bitcoin as you feel comfortable holding. For some people, that represents a 1% exposure. For you, it represents 70 or 80%. For others, it can represent 100 or 110, 130% exposure. And this is where I think it comes down to personal preference. It's really important to understand what you're holding. I haven't had the experience of telling a client not to buy any more Bitcoin. Actually, there is one example where I have talked a client out of buying Bitcoin, and we agreed that it was a really good idea to buy Bitcoin. But the client said to me, look, I'm all for it, but my wife said she'll divorce me if I buy any more Bitcoin. So sadly, we had to lose the battle, win the war, and be satisfied with whatever was stacked at that moment in time was going to be what they were happy with. So I think it's really important about understanding your personal situation. And I guess the most important thing I can talk about to this point is, from a good friend of ours, Jeff Booth, just learn as much as you can. And the more you learn about Bitcoin, the more you'll buy. So I think it's our job, and, you do a absolutely bang up performance of doing a great job in educating people.
The first thing that every Bitcoiner does, and the most important activity that every Bitcoiner keeps on doing, is buying Bitcoin. And I personally use Relay to buy and sometimes also spend or sell my Bitcoin. And there are two main reasons why I do so. The first one is it's Bitcoin only. They do not do any shit coins. They do not do any cryptos, any stocks or anything else. This is a tool, an app that is fully focused only and solely on Bitcoin. The second one is self-custody. They give you the keys to your Bitcoin the moment you buy them. You never give them the control over your Bitcoin, and you don't have to trust them because you can verify that you and only you have the keys to your Bitcoin. There's no third-party risk. There's no freezing of your assets. There's no rug pulling. There's nothing of that. Download Relay, the app, on your phone, or go to relay.app on your browser and use code Robin to save fees and get cheaper Bitcoin. I want to tell you about something very special to me. It's called MicroStrategy. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With MicroStrategy, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroStrategy is not selling the washer. MicroStrategy is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today, and you can make with that unlimited amount of backups. Go now to microstrategy.io.